Hello investors, welcome back to your number one place for all your investing needs. Today we're going to be discussing the top 5 stocks for the second week of April. Now these are stocks that have been hit hard by the stock market crash in the past month, which is going to be presenting us with some great discounts and obviously some great buying opportunities for the long run. Now before we get into the video guys, don't forget to subscribe to the channel for more content like this. And don't forget to smash that like button for me. Let's try to get over 250 likes on this video. Can we do it? And now let's get into the list. All right, guys. So before we get into the list, we're going to go ahead and take a look at the Dow Jones and how the market is doing in the past week. So if we take a look here, obviously, in the long run, it was trading up here at about 29,551 high. It went down all the way down to about 18,591. We made a nice, uptrend, and then we kind of went back down, and now we're up on a rise again. And in the past week, we've done very well. If we look at the past 5 days right here, we were trading at a low of about 20,775, and currently we closed at 23,433 on Wednesday afternoon. So we were up about 3.44% or about 779 points on Wednesday. We had a great day. Yesterday we had a nice day, but then the close was horrible and we went back to literally zero flat day. But we have some great things coming up. The curve is starting to flatten out. The cases are starting to, lower, and things are starting to get better. But let's get into the list, guys. All right, guys. So the number 5 stock on the list is going to be Stor, STOR. So this is going to be Stor Capital Corporation, and this is a real estate investment trust company, also known as a REIT. So today we actually had a really good day. We went up about 9.28% or about $1.41. It was trading at about $16.60. If we take a look here, we were trading at a high of about 40, almost $41 right there in February. Obviously, from this price, we are down about 58.5% currently. So, the stock lost more than half of its value right there. And it really hasn't started to recover. I mean, it's still kind of at this low, so it hasn't even, began to recover. And it is a very nice stock. So this is one of the stocks that I own actually on my M1 Finance. I own O Realty Income, and I own Stor Capital, as well as I believe Welltower it is. But yeah, this one is definitely still at this low. But let's take a look at some of this other stuff, guys. If we take a look at their dividend rate is $1.40. Their dividend yield is 9.22% currently because of this price drop. So in the upcoming weeks, I'm definitely actually going to be loading up on some more of these, because 9.22% dividend, that is a really nice dividend, especially for a REIT like this. Market cap of 3.65 billion. If we take a look at some of their other stuff, like their dividend right here, let's take a look. Obviously 35 cents, every quarter. If we look at their dividend yield, it's tremendous. I mean, look at this. 4-year average yield is 4.62%. Obviously, their dividend is usually around 3 or 4%, almost like 4.5%. As we can see here, it was about 3.5, almost 4%. A couple weeks ago, and now it's all the way up here about 9%, because the price dropped. But that is okay. I mean, 9% dividend, it's a good time to load up on this one, obviously. If we look at their dividend growth, years of growth, they have 5 years of growth. Every year, they've been going up $1.04, $1.12, $1.20, $1.28, and currently $1.36 per year per share, obviously. If we look at their dividend history, obviously every quarter they've been increasing higher and higher. Currently they're paying about 35 cents per quarter, which is not bad at all. Their payout ratio is about 70.33. It was pretty high up here, and it's getting lower and lower, so that is good. But 70, obviously, with REITs, their payout ratio is going to be a lot higher than regular stocks, because they have to, I believe, return back about 90% of their profits in dividends. That's why the REITs have very high dividends compared to other stocks. But Stor Capital, definitely with a 9% dividend, great buying opportunity. I mean, it has a long way to come back up, about almost 60%. So I don't see why this one would not be on your list. Number 4 on our list is going to be ticker symbol BA. BA stands for Boeing. And this is an American multinational corporation that designs, manufactures, and sells airplanes, rotorcraft, rockets, satellites, telecommunication equipment, and missiles worldwide. This is an amazing company. Today it was doing good. It went up about $5.29 or 3.74%. It's currently trading at $146.87. It was trading at a high of about $340 here back in February, and it's gone down a lot. It's gone down about 56.5%. So almost just like the last one, we have over 50%, uptrend right there. So it lost half of its value. So obviously, this is something that I'm looking for. Obviously, airline companies are down a lot. All of them are pretty much down. Southwest, Delta, American Airlines, everybody, especially, and Boeing. Boeing is one of the big ones. I mean, they make, not just, with airline stuff. They're doing a lot of stuff with space and all that. So this is a company that I believe in the long run. I don't, in my opinion, I don't see it going like bankrupt or something, or the company just closing down. They're too big for that, and if they were to run out of money, they would definitely get bailed out. But if we take a look right here, they have actually a dividend of about $8.22 every year. So their yield is about 5.81%. So once again, I mean, who would have thought that Boeing has that nice of a yield? 5.81%. That's almost a 6% yield on a stock like this. That's amazing. Market cap of about 79.88 billion. That's a nice market cap as well. If we take a look right here at their dividends, obviously $2.55 or $2.55. So the dividend yield, as we just discussed, it was down here about 3% and then lower and lower, closer to about 2% in recent times. So now seeing it up here at about 5%. That's actually really crazy to see almost, a 5.5, almost 6% dividend on Boeing. But their 4-year average yield is 2.45%. Dividend growth, obviously, they've had dividend growth for the past 8 years of growth. They're continuously increasing higher and higher, paying out about $8.22 per year per share. If we take a look at their dividend history, the dividend history is obviously great as well. Every quarter they're paying out about $2, a little bit over $2. So overall, when we take a look at Boeing, we see that Boeing, it's lost more than 50% of its value, has a nice dividend right now. So great buying opportunities on pullbacks like this, guys. The number 3 stock on our list is going to be ticker symbol T, which is AT&T. So this is an American multinational conglomerate holding company. So obviously AT&T, one of the companies that is actually battling for the 5G, just like Comcast, Verizon, and all the other companies. But currently AT&T is trading at $29.89. It's up about 33 cents today. Actually, today I believe they had their dividend. Whoever was holding the stock, they had the dividend payment on April 8th, 2020, and it was up about 1.12%, which is actually rare to see it go up on a dividend yield like that, which is pretty cool. The stock is down about 22.5%. So it went, it was trading at about $38.44 high in February. Currently, it's almost $30, so 22.5% downtrend. If we look at their PE ratio is 8.54, very low PE ratio, which is good. Dividend rate $2.08. Their yield is 6.91%. AT&T was always one of my top dividend payout companies on M1 Finance, obviously, but now almost a 7% yield. That's really nice. Market cap of about 212.76 billion. If we take a look at their dividend, obviously, like we just mentioned, 52 cents per quarter. Their dividend yield, actually, the 4-year average yield is 5.92%. It's been up and down, trend, but recent times it was about 5.3%. So right now it's about 1.5% higher. If we look at their dividend growth, they have 35 years of growth. So for 35 years, they've been able to grow their dividend every year, and currently it's paying out about that $2 per year. Their dividend history, obviously, is going to be nice every quarter. It's nice, about 52 cents right now. So that looks good. And then the dividend safety payout ratio has been going, lower and lower, from the high 70s to the low 50s right now, or high 50s. So it's under 60% right now. But AT&T, nice pullback there, about 22.5%. I see a lot of room for growth with AT&T. They have a lot of stuff coming up in the upcoming months. So, this one, another one to look out for. Number 2 on our list is Uber Technology. So this is an American multinational ride-hailing company offering services that include peer-to-peer ride sharing, ride service hailing, food delivery, and a micro-mobility system with electric bikes and scooters. So obviously, Uber was up about $1.20 or 4.66% today, currently trading at $26.94. It was at a high of about $40.92 right here in February. So the stock is down about 34% from that high. The stock was trading here at about $14.82. That was a great buying opportunity. Whoever bought at that time, really lucked out. If you bought Uber at about $14 or $15 down here, you really did really good, because now it's already up to about $27. So that's what, a $13 gain in just a few weeks. Obviously, Uber does not have a dividend, so you're not going to be receiving any type of dividend. Their market cap is currently at about 44.46 billion. So like we said, no dividend. If we look right here for their growth, they have a lot of, growth coming, and they're new. They're still new to this market, just like if we take a look at Lyft. Lyft is also new to the market, and Lyft and Uber are going to be very similar in the way they move. Right now, I feel like they're just following what the market is doing overall, but Uber still has a long way to go. We're just getting started with Uber, so the only area that I see it is going up from here. Okay, and our number 1 pick for the second week of April is going to be ticker symbol BAC, which is Bank of America. So Bank of America is an American multinational investment bank and financial service company. So currently it's trading at $23.45. It's up about $1.31 today, or about 5.92%. It was trading at a high of about $34.85 here in February. Currently, $23.45. So the stock is down about 32.5%. That is a huge drop. I mean, almost 1/3, or there's about 1/3 of the stock price is down, and it was even lower down here, about $18. Great buying opportunity as well. So their PE ratio is super low at about 9.2. Their dividend, obviously 72 cents per year, with a yield of about 3.25%. That's not a bad dividend at all for a banking company like this. JP Morgan Chase is another one to look at, obviously, but Bank of America, 3.25% for them. Not bad at all, in my opinion. Market cap of 193.17 billion. That's a huge market cap for them. If we take a look at their dividend, obviously, like we just mentioned, 18 cents per share. If we look at their dividend yield, the average right here, it's been increasing actually slowly from about 1%. It was at about 2%, right here a month ago, and currently it's almost 3%, but their 4-year average yield is 1.64%. Their dividend growth is obviously increasing, so they've had 6 years of growth, so they were fine here. It looks like their dividend was very low right here, almost like they suspended it or something. But then it's been increasing for the past 6 years, so it's not doing bad at all. Currently at 66 cents. And then if we look at their dividend history, obviously it's going to be the same thing, where it's increasing more and more in the past 5 years, from about 5 cents quarterly to currently about 18 cents every quarter. Their dividend safety, just like the other ones that we were showing, payout ratio about 29.91%. That's a pretty low payout ratio, something I like to see. The lower the better. But yeah, Bank of America, great buying opportunity in my opinion. The finance sector is down right now, and I know earnings season is coming up, and it's going to be a big ride, to see a roller coaster ride, pretty much, earnings season. But Bank of America, good one to look at. Okay, guys, so those were the top 5 picks for the second week of April. Now, obviously, like we said, the market is still, down. Some people are predicting that, we already hit a bottom, but nobody really knows if this was the bottom right here on March 23rd, about 18.5 thousand. That could have been possibly a low, or, the bottom, but we can't really predict that right now. We'll see in the future what happens. As of right now, that's what everybody's thinking. That could have been the bottom, but you never know with earnings seasons coming up. This might be a fake, bull rally, and we could end up just going down even lower and lower, or we could keep continuing trending up. But the one thing that I will say is I feel like the market is coming back too quickly. I mean, right here, we know that the high was at about February 18th, and then the low was down here about a month. So it took about a month. I believe it was like 22 or 25, somewhere around there, trading days, Well, that is a really fast bear market that we got into. But if we look here from the 23rd up to about, the 7th of April, so that's probably like 2 weeks right there. In 2 weeks, we've jumped about 5,000 points on the Dow Jones. 5,000 points is a lot for the Dow Jones to gain, in that short of a time period in about what, 2 weeks. So I feel like the bull rally now is coming, very, very quickly. I mean, it's something that I like to see, obviously, because I did buy the dip and I bought a lot of stocks and shares down here at this low. But I would like it to pull back once again. I wouldn't mind at all if it pulled back one more time, and we could continue to get some more and load up after the earnings season, and continue the second and third and fourth quarter, and then we can go up. But nobody really knows if we hit that bottom, or if we're gonna hit a lower bottom than we did in March. So that's something to keep an eye out on. But the stocks we mentioned, obviously, they've all been hit hard, 22%, 30%, 50%. There's many, many buying opportunities, a lot of stocks that you can do your own research, obviously. Like we always say, I'm not a financial advisor, so do your own research before investing, or buying anything in the stock market. There are many, many stocks to be looked at right now. Those were just five that I'm keeping an eye out on my portfolios and my watch lists. But we'll be making more videos, guys, about topics like this, top five stocks, pretty much for just trading regular stocks, dividend stocks, penny stocks, like we always do. So if you want to stay tuned for that, make sure you subscribe to the channel. Make sure you smash that like button for me. Let's get over 250 likes on this video, and I'll see you guys next time.